Are you sick and tired of paying huge amount of income taxes every year? You pay thousands and lakhs of TDS every year, yet you end up with the notice from the IT department at the end of the return submission period. See, your salaries are getting hiked, but at the same time, the income tax department intrudes and invades your payslip to get their cut. What if I tell you that you can get the double tax exemption? Double tax exemption bole to you can claim 3 lakh under section 80C, or your basic exemption limit, which is of 2.5 lakh, you can claim 5 lakh. Stay tuned till the end of the video to learn more. What is going on, fellas? Welcome back to Debit Credit Nation, and I'll see you on the other side of the intro. Roll it. Oh, I just come to know that we don't have any intro yet, but we will come up with one very soon. So, to reap the benefit of this double tax exemption, you need to satisfy 4 conditions, 3 conditions, 2, no, only one single condition. And the condition is you need to get married. How? See, if you are married, then you can form a Hindu Undivided Family Account, which is also known as HUF or HUF account. This HUA is the legal way for you to get this double tax exemption benefit. Now, how to form this HUF? As per the Income Tax Act, the moment you get married, the HUF is formed. You just need to legally declare that you are forming this HUF account. So not only Hindus, even Sikhs, Buddhists and Jains can also form HUF once they get married. You need to talk to a lawyer, and that lawyer will create an affidavit on behalf of you where you're going to officially announce that you are forming an Hindu Undivided Family. So what is Hindu Undivided Family? You, your wife and your children can form an Hindu Undivided Family. The affidavit will contain the details of the members of this Hindu Undivided Family and the place of conduct of business, or what kind of business you are involved in. Once you file this affidavit with NSDL, NSDL is going to issue a new PAN account. So you are going to have 2 PAN. That is the first permanent account number which was already there, and a new permanent account number or PAN will be issued to your HUF. The first one is called Shoubhadra Talapatro and the second one is called Shoubhadra Talapatro -HUF. This is your second PAN which is used for your HUF transactions, and also a new bank account needs to be opened for this HUF. Now, what are the benefits of forming an HUF? So as I have already told you that as per Income Tax Act, in the eyes of income tax, HUF is a separate legal entity. So that means now as per income tax, there are 2 separate taxpayers, you and your HUF. So that is the benefit. You can claim the basic exemption limit of 2.5 lakh for yourself and another 2.5 lakh for your HUF. Similarly, 80C deduction 1.5 lakh for yourself and 1.5 lakh for your HUF. Also, if you have some long-term capital gain transaction for which you used to claim 1 lakh exemption under section 112, and now you are going to claim 1 lakh for yourself and the other 1 lakh for your HUF. So these are the benefits from the taxation point of view. What other benefit can you avail via this HUF account? With this HUF account, you can create one more Demat account. That Demat account will help you apply to IPO. That means your chance of getting an IPO subscribed becomes 2 times. That is, you can apply to an IPO on your own account, you can apply to an IPO from your HUF account, you can apply to the same IPO from your wife's account, from your son's account, from your daughter's account. So HUF is an additional Demat account from which you can apply to an IPO. Now let's talk about the demerits of forming a HUF account. Now one might wonder that if HUF is so beneficial, then why it is still unexplored? The reason being, that means in HUF you can attach all your income but your personal income. That means your income from salary that you get will stay to your name only. That you cannot pass on. If you have any other income apart from the personal income, for example, say you have an ancestral house property, your father-in-law or your mother has gifted you. So in that house property, whatever rent you are getting, that rent becomes taxable to your head. Now you can pass this rent to the HUF. Or if you have a business, you can pass the business's ownership into your HUF. So those incomes can be passed on, transferred or shown in the HUF account, but your own income, your salaries, you cannot switch to your HUF. That is a main problem. And there is one more pitfall. This is a very insignificant one, that is the rebate that you get under section 87A, that is from 2.5 lakh till 5 lakh whatever income is there, on which the 5% tax, that is 12,500, is exempted for individual. That exemption is not available in HUF. So for example, if an HUF's total income becomes 4,90,000, for an individual the tax liability would have been 0. Why? Because the income is less than 5 lakh. That means under section 87A the total tax liability becomes 0. But in case of HUF, that 87A wala deduction is not applicable. That means he still has to pay tax, or the HUF still has to pay tax on 4,90,000 minus 2,50,000. That means on 2,40,000, 5% tax the HUF needs to pay. Now let's take a numerical example to see how with the help of HUF you can legally reduce your tax liability.
Hey fellas, so here we are going to take a numerical example to see how with the help of HUF or Hindu Undivided Family Account you can reduce your tax liability. So let's go to the system. So here you see this gentleman has these 4 sources of income. The first source is called salary income. So from his office he draws 25,000 annual salary, and he has got a rental income, that is the same ancestral property that his parent has gifted him. From that property he is earning rent worth 12 lakh. Suppose it's a commercial property, from that commercial property he is earning a rent of 1 lakh. Say he has a ground floor which he has rented to say pantaloons. So from them he is collecting a monthly rent of 1 lakh. The third source is a business income. So from a business he is also earning an income of 6 lakh. And the last source is long term capital gain from sale of share. So he has sold shares and he has earned profit worth 2 lakh during the year. If I add the summation, if I do the summation, I get the total income as 45 lakh. Now first let's say the individual doesn't create any HUF account. What is his tax liability? From the salary worth of 25 lakh he gets a standard deduction of 50,000. So his salary becomes 24 lakh 50,000. From the house property the total income 12 lakh. From that he also gets a standard deduction of 30%. His taxable house property income becomes 8 lakh 40,000. Profits and gains from business and profession, this is the third head, PGBP. From here he has to pay tax on 6 lakhs. The entire 6 lakhs is taxable. So this is the profit. Okay, so this 6 lakh is the profit, that is after deducting all the expenses he is left out with 6 lakh. Next, the last head, he has a long term capital gain of 2 lakh, out of which we have an exemption under section 112A worth 1 lakh, and the rest 1 lakh he has to pay tax on. So his total taxable income, that is the gross taxable income, comes at 39 lakh 90,000. And now he has made some couple of deduction he has made, that is 1 lakh 50,000 on 80C. Maybe he has paid insurance premium, or he has paid for provident fund, that is 1 lakh 50,000, and he also has a mediclaim of 50,000. So total deduction he can claim worth 2 lakh. Therefore his total income becomes 37 lakh 90,000. Therefore out of his total income of 37 lakh 90,000 he has to pay tax. Now currently, since he has a long term capital gain, his tax liability will be calculated in 2 separate ways. So first, the tax on total income excluding the long term capital gain, that is on 37 lakh 90,000 minus this 1 lakh, that is on 36 lakh 90,000, his total tax liability will be 9 lakh 56,280. And for the long term capital gain of 1 lakh, on which flat 20% tax will be deducted, so his total tax becomes 9 lakh 76,280. Now this is the existing tax he has to pay if he does not go for a HUF account. Now let's say the same individual, the same assessee or the same taxpayer goes for an HUF account, an HUF account. Now he has to file income tax twice, once as an individual and the other one as an HUF. That means he has a separate PAN, that is once his existing PAN, and the second one is the new PAN that will be issued to him as a part of the HUF or the HUF. Now I have already told you that the personal income you cannot attach and cannot show it under the income of the HUF. So this 24 lakh 50,000 stays in the individual account. Next, for the income from house property, he the assessee can push it or show it or attach it to the HUF. That means this 8,40,000 on which he was earlier paying tax, now it will be transferred to the HUF account. Again the business income also he can transfer, so 6 lakh business income goes to the HUF. Next, he has a long term capital gain of 2 lakh. Now if he can carefully distribute this, as 1 lakh has his own income from capital gain and the other 1 lakh as a part of the demat account of the HUF, then he can claim 1 lakh and 1 lakh. This 1 lakh deduction he can claim twice. That means from long term capital gain his total income becomes 0. So his own total income becomes, that is, this is gross total income, this is 24,50,000, and the income of HUF, gross total income of the HUF becomes 14,40,000, right? Now the deduction he can claim twice, this 2 lakh for his own and the another 2 lakh for his HUF. So therefore his total income becomes 22,50,000 and 12,40,000. Now if I add these two, his total income is coming as 34,90,000. Previously his total income was 37,90,000. He has already reduced his tax liability by 5 lakh. Basic exemption limit of 2,50,000 will be used here and it will be used here. That means he is already deriving the benefit of 2.5 lakh again in the HUF. So on this income total tax liability comes as 5,07,000, and for the HUF the total tax liability comes as 1,91,880. Now if I add these two, it comes as 6,98,880. So initially he was paying a tax worth 9.76 lakh versus with the help of this HUF he is paying tax worth very close to 7 lakh. So he is saving tax worth 2.77 lakh thanks to this HUF arrangement. So this is how you can save your total tax liability using this HUF. But before I close this video, just one recommendation: if you have only your own personal income, nothing else, then it doesn't make any difference if you create a HUF or not. But along with your own salaried income, if you have some other income coming from different sources, like in this example, this income from house property, income from business, long term capital gain, this additional income you can transfer it to the HUF and reap the benefit of double exemption. So that's all for today, folks. We'll see you next time. Debit Credit Nation signing off. Take care.